All right, so I started looking at the sale comps for the Frederick in San Antonio. So the Frederick is a 1978 vintage. And looking at the recent sales over the last 2 years, anything between 1970 and 1980, put it up here in this list and noticed that there's some very high vacancy for the properties that have traded over the last 2 years. The price per unit is kind of all over the place, but an average of 86,000 a unit. At least in the Northwest where the Frederick is located, 65 a unit. Let's see what else. We've got 105 a unit, 90 a unit, 76 a unit. So it's kind of all over the place, but at least what caught my attention was the vacancy. So very high vacancy, 21%. Some properties reaching 42%, 25%, 40% for this asset class type. Now, these vacancies don't necessarily reflect what the vacancy was at the time of the sale. It's the current vacancy that I can gather off of Costar. So I started to ask myself about um, you know, the vacancy that is currently in San Antonio, and is this really specific to like 1970s and 1980s deals? So going into CoStar, I went in and put that we want to look at as soon as I get the filters here. So multifamily deals, 100 plus units, built between 1970 and 1985. And just kind of looking at the statistics here, so there's 71,000 units in San Antonio, in all of San Antonio, that match the filters, and the current vacancy rate is 15%. And if you look at occupancy over, basically this is a 10-year period, you can see that we're currently in the lower end of that spectrum. Used to sit in between 87 and 93. So if we look at history, let's go to vacancy here. Daily vacancy rate. It's not kind of bouncing all over the place here. So let's expand this here. Takes a second. I'll pause it for a second. Okay, so this is the vacancy graph. Let's look at the last 10 years. Um, and I want to look at it from an annual. So you could see that, yeah, definitely over the last couple of years, with the deliveries of new asset classes, the vacancy has risen. Over the last like 10 years, the vacancy was pretty good. It was at 6.5 up to 8.5, 9, probably peaking out at 10. And then COVID, where vacancy came down, and then new construction increased vacancy up to 15%. There was another chart that I was looking at here that I wanted to share. So let's go back to summary. I'm just going to pause this real quick. All right, so this is the graph that I was actually looking for. This is the market rent per unit and the rent growth for this specific type of criteria, 1970s to 1985. So if we look at, let's just say the entire tracking history since 2000 here, and looking at the next 5 years. So the orange bar graph here represents the rent growth. Um, and so the rent growth, yeah, like 2 to 3%, skyrockets there in 2020, 2021, and comes back down, negative rent growth for the year 2025, and then kind of back to call it normal, stabilized. Stabilized rent growth for 1970s deals, it's sitting around 2.5%. This here is the vacancy and market asking rent per unit. And so you could see vacancy rate, over the last couple of years, again, like hitting a peak of say 10.8%, coming back down. So really vacancy normalized in this market should be under 10%. And then with the construction of new assets, it increased all the way up to 15. And it looks like it's kind of projected to be, coming down a little bit, but still quite high. It's not back to normal. Um, and as a result, there was a bit of a dip because of the probably the vacancies that came in. But they're also forecasting that market rent growth will increase over the next couple of years. But yeah, that it was at least important to see where the vacancy rate was. Now, I haven't actually checked this yet, but what if we go back and change the metrics to say 2000 um, properties that were built in say 2000 or let's even go probably a little bit more than that, 2010 to today. So 2010 to 2024. Okay, so this is 2010 to 2024. So you can see the vacancy is a little bit less. It was 15 for the 1970s deals, and there's 109,000 compared to the 71,000, I think it was. And so occupancy is actually on the higher end for the last 10-year average. So then if we go to the market rent and growth, let's look at this one, expand this. Okay, so rent growth is a little bit less. In the 1970s deal, it was about 2%. This is about 1.5 to 2%. And then obviously a skyrocket there, comes back down, normalizes, and 3.5, 3.6, 3%, where asking rents have definitely are projecting to go up. They have come down because of probably some new deliveries as well. So let's now look at vacancy. Here, this one here. Let's look at the forecasted. Okay. So orange is the vacancy rate. So let's see, let's do all. And yeah, obviously it's only going to go to 2010. And it looks like it's trying to stabilize because it was brand new property. And this is obviously kind of uh, hard data because you got new product that's coming on that's fitting within the criteria that is now getting tracked. And so that's probably why you have a high vacancy rate because it is being absorbed. But if we look at the trends moving forward here, the vacancy rate is much lower. It was 14 to 15% vacancy rate was the forecast for the 70s deals. And it's under 10% for the newer product here. So let me just to make sure that I'm covering all the asset classes. I'm going to change the filter a little bit here. Um, let's look at, for example, 1990 to 2015. Okay, give it a second. Okay, so this is interesting. So, uh, from the 1990 to 2015, vacancy rate is at 9.2. So it is probably a more desirable asset class of 9.2%. Currently on the lower end of the spectrum of 90% versus where, it kind of averages out at 92%. And then let's look at the market rent growth here. So annual, let's do all. Okay, so market rent growth, 1 to 2%. Here's the global financial crisis. Again, so I'd say somewhere between 2 and 3% is the rent growth, and then the forecasted rent growth, a little bit higher actually. Um, so 3.5, up to 3.7% over the next couple of years. So now if we look at this chart, so include forecast here. Okay, so and then all the history. So yeah, vacancy rate is less than 10 over the last couple of years, a bit of a spike here in 2015. Um, and then a dip in during COVID. And then let's see, so vacancy rate uh, is expected to get up to about 9.5% and then come back down to 8.4. So based on what I can see here, 1970s deals are going to have a harder time with occupancy um, over the next couple of years because of the amount of deliveries that came into San Antonio, which are going to absorb all those tenants that want to live in a newer property. So you're going to have a higher vacancy trying to absorb those tenants. So I think it would be an uphill battle. Um, you're fighting against the market. Sorry, that was a slip there. Trying to compete against newer properties. And so I think you're going to continue to see higher vacancies in 1970s and probably 1980s asset classes due to the deliveries, where it's um, probably a better play to be in like the 1990s to 2015 range because of it looks like it has greater stability. It is newer. It's not brand new, and so you're not going to be paying those premium rents for those brand new properties. But anyways, thought that was pretty pretty interesting to kind of dive into that a little bit.